เปิดศักราชใหม่รับปี2564นะครับวันนี้ทาง FINNOMENA ก็มีเรื่องดีๆจะมาแชร์กับนักลงทุนนะครับก็คือล่าสุดเนี่ยก็ประกาศกันไปแล้วนะครับเป็นพาร์ทเนอร์ชิพระหว่าง FINNOMENA กับ Franklin Templeton ที่เป็นบริษัทบริหารเงินลงทุนระดับโลกนะครับดูแลเงินลงทุนอยู่กว่า40ล้านบาทเลยทีเดียวโดยในโอกาสนี้นะครับเราก็ได้รับเกียรติจากคุณเอ็ดเวิร์ดเพิร์กส์นะครับซึ่งท่านเป็นประธานเจ้าหน้าที่การลงทุนหรือ Chief Investment Officer ของทาง Franklin Templeton นะครับทางด้าน Investment Solution หรือการจัดพอร์ตการลงทุนด้วย global asset allocation ให้กับนักลงทุนทั่วโลกนะครับก็ในวันนี้นะครับก็ท่านผู้ชม FINNOMENA ก็จะมีโอกาสได้ฟังมุมมองระดับโลกนะครับของคุณเอสนะครับว่ามีมุมมองต่อการจัดพอร์ตอย่างไรโอกาสการลงทุนหลังรัฐบาลใหม่เป็นยังไงซึ่งทั้งหมดเนี่ยก็ส่งตรงมาจากทางแคลิฟอร์เนียให้กับนักลงทุน FINNOMENA ทุกคนครับ
Hello Ed, how are you doing?
I'm doing well. Thank you very much. It's very good to be with you.
Thanks for your time today, and it's lucky for us to having you today. Today we would like to have some discussions on the investment outlook and market view for 2021 from Franklin Templeton, and it's the first time that in Thailand we are having like global asset allocations team to deliver like investment knowledge and outlook for Thai investor here. So let me start with the introductions and getting to know. Can you share a little bit your journey with Franklin Templeton?
Yes, certainly. And you know, my career with Franklin Templeton has been quite a long one. I joined the firm in 1992, so I have been with Franklin Templeton now for just over 28 years. So initially, yeah, so a long career, and I think a lot of it has to do with the company and with the colleagues that I've had the opportunity to work with. My journey really started as an analyst on our investment team. So I've been on the investment teams my entire career, ultimately covering companies from both the equity and credit side. So understanding the fundamentals of the business and making recommendations for our client portfolios. Ultimately, you know, my career did advance to the point where I had an opportunity to be a portfolio manager and ultimately to lead an investment team as the chief investment officer, and that's certainly been very rewarding for me on this journey. And I think the thing that excites me the most, like I said about Franklin Templeton and why I've had such a long career with the firm, is really how we're designed to be very collaborative across our organization, and that's something that while I'm part of an investment team here in California, we have colleagues literally all over the world that touch all types of markets and have deep expertise. And the fact that this company has always valued the opportunity to engage and learn from one another, it's really a key I think part of what we try to bring for our clients, and it's something that I wouldn't trade for anything. I really value the global perspective. I really value having an investment team that brings that to everything we do.
So let's start with our investment session here. And what is your biggest takeaway and lessons that learned from this crisis on the asset allocations and investment solutions for investors?
You know, I think the greatest lesson really has to do with how you bring together that information, that perspective, the analysis of what's happening and the potential paths that we have going forward. But really, what made it more unique than that, in fact, was the speed with which economies contracted, the speed at which markets globally reflected the uncertainty that was gripping the markets back in February and March of last year. The speed with which the authorities, the monetary authorities, governments started enacting fiscal support programs, it's really the magnitude and the speed with which those policies were implemented that ultimately was the defining moment for portfolios, for investors, for asset allocators. And that was something that we followed very closely. As markets reacted and equities plummeted in many regions, that was really a phenomenal opportunity to look past.
Thank you, Ed. And we saw that you have published your research piece on it's called a post-pandemic playbook for like 2021 investment strategy this year. Maybe can you share your thought on the outlook of 2021 and where are you seeing opportunities today?
But as we revisit that period in 2020, what was really driving it was pretty limited, pretty narrow. There wasn't a lot of breadth to the markets. Obviously, the large technology stocks got a lot of that attention and really drove markets. As we all transitioned, as we thought about how our lives and how our livelihoods were being impacted and altered, and certainly many of these companies were tremendous beneficiaries of that transition that was happening in our societies, and as a result had phenomenal performance. But I think what we've also seen is as the expectations for the performance of these businesses increased, so did the valuation, so did the multiples, whether it's price to earnings or even overall enterprise value to sales or to operating profits. One measure after another you can point to and see, a very significant rise in expectations. And I think our view has been, a lot of the story has been this divergence. This limited group of companies drove such a significant amount of the return. It actually made substantial other parts of the market very attractive. And that's something that, as markets are now adjusting to this post-pandemic playbook, we're seeing that dynamic play out. What I find very interesting is, despite the tremendous upside that many of the technology stocks experienced, in fact, since the beginning of September, all of them in this group, other than Google, have actually underperformed the market. So while we don't necessarily expect a significant contraction in the value of these shares, we do believe that that substantial period of outperformance was unique. And in reality, as we move to a more normal functioning economy and markets, there are substantial sectors, financials, energy, industrials, materials, that are all going to play into many of the themes that are very strong. Now, while there's some uncertainty, we do expect across the globe to see significant improvement in growth. We do expect to see continued support in the near term in terms of monetary policy, in terms of fiscal stimulus programs. That's certainly something with the election in the US that we're expecting to play even a greater role than had the election outcome been different. If I were to step back and take maybe a little bit higher level, we do have a bias toward equity securities. We do encourage that in our client portfolios, largely due to that backdrop of an improvement and a return to a more normal functioning environment for economies, for financial markets. But it also has to do with the very low level of interest rates and the very low expectations that we have for the potential returns from significant parts of the fixed income market. So I think part of it has to do with the relative value and our expectations for returns going forward. That also plays into those recommendations.
this year maybe it's a good idea for investor to having the cyclical type of equities like energies or financial as part of their portfolio, not too much overweight on the tech stock.
While there's a backdrop that's certainly favorable for a more diversified equity exposure, that's where you want to make sure you're not underexposed to key themes that can favorably impact your portfolio in the near term. You certainly don't want to eliminate those longer secular themes like you're describing. Innovation is something that we still very strongly believe in and think will be a big part of the forward path on a 5 to 10 year basis. So that's certainly an important aspect. And I think even looking at the large tech stocks, while there is that challenge for them in the near term to meet some of the elevated expectations that have been built up, I think it's important to acknowledge that pretty much across the board, these businesses really benefited from the shift that we saw in our societies.
Thank you, Ed. And as I mentioned, that the thematic play is very popular here in Thailand. FINNOMENA as a financial advisors company here, we are also advise some our client to invest into ESG team, especially the renewable energy starting from like fourth quarter last year before the election result. So maybe can you please share the view of the Franklin Templeton on ESG and green energy and how investors should grab the opportunity? What is the investment that we should looking for?
We see it as both a longer term, secular trend that we're seeing. We're certainly very focused on the impact that significant infrastructure spending can have as we pursue the greener technologies. Certainly the environment, the climate change challenges that we clearly have are going to be an important theme for investors, and we're very focused on that. So I think there are a lot of different layers that you can think about ESG, environmental, social, and governance. Governance has probably been the one that has been most prominent historically, but it's really this last decade, the emergence of environmental and the emergence of social issues, which certainly we're seeing take on a greater role. In many respects, the pandemic has done a lot of things in our societies, and one of them has been, I think, shining a greater light on these issues that we're all facing, these issues that need solving around the globe, and will be an important part of how resources are allocated, and ultimately that can have an important aspect or role in the performance of your portfolio. So we certainly encourage clients to consider the role that it should play in their portfolios, and certainly from our engagements with all the different investment teams at Franklin Templeton, it's an important aspect of understanding the approach and importantly how it's driving the specific investments that we're making.
Thank you, Ed. And talking about the emerging markets, we would see that for the COVID-19 situation in emerging market, especially Asia, China, the case of COVID-19, it seems to be more contained compared to G3 countries. So for the GDP economic growth forecast, we also see some pick up in emerging market, especially in China too. And given the dollar weakening in the past year, significantly weakening, it trigger the fund flow to emerging market for the currency to be quite strong at the moment. What do you see if the trend is will still going on, and how would this we would see some dollar appreciation a bit after the Joe Biden announced the strong fiscal stimulus for almost another $2 trillion. Do you think this will be impact the trend of the emerging market equities and currencies this year?
Yeah, and there's certainly a lot of places we can take the discussion on the experience in emerging markets on a relative basis to to developed economies, and I think you've touched on a number of them. Clearly, as we got to the second half of 2020, it became more clear that the experience in managing through the pandemic was more successful in many of those regions. Environment certainly was contributing a fair amount of uncertainty for much of 2020. As we now look forward, have a new administration, I think there's a greater degree of conviction that the outcome will be more successful, and that's certainly improving, I think, the growth expectations that we have. But ultimately, whether you're talking about developed economies, emerging markets, we need to be more granular. I think we need to be more specific. So while East Asia's had tremendous success, and certainly we're very optimistic about the forward path when you're making asset allocation decisions, when you're thinking about the value of the currency, as you mentioned, the fact that many of these economies are experiencing a greater return to normal activity, a greater return to growth sooner, has certainly influenced the situation. But we do think markets have adjusted to a meaningful degree. We don't at this point expect very significant further depreciation or appreciation of the US dollar. So we're expecting it to play maybe a little bit lesser of a role. And while we have these forecasts, they're by no means, as we've all learned so many times in our careers, that they're by no means written in stone. And as we move forward, the uncertainty will remain, and I think we'll continue to evaluate that and understand what it means for our portfolios and make adjustments to that asset allocation decision on an ongoing basis.
There are some talk around in the market that there is a chance that the US 10-year Treasury yield could be possible to climb over to across to, like, let's say 1.5 to 2% this year, given that the inflation seems to be a factor that will make the Fed not be able to pumping the monetary stimulus as they can do last year. What do you think about this matter, the inflations and bond yield? Because in the long run, if the yield is increasing earlier than market expect, it might affect the risky asset this year.
Yeah, I think we are seeing that play out in markets. And if we go back to the latter part of the summer, so the August-September time period, interest rates, certainly in the US, longer term interest rates were near their lows. There was a lot less certainty around the path, and I think that was reflected in yields. We've seen a fair amount of adjustment from that low of about 0.5% to about 1.1% today on the US 10-year Treasury. So we've started to see that adjustment, an increase, a steepening of the yield curve, reflecting some of the changes in those forward inflation expectations. So, we do think that could play out a little bit further, but not excessively. We do not think in the near term that inflation risks are building. Now, we certainly will monitor it. I think if you were to ask me the question the other way, what are the primary risks? It's going to be very, very high on the list. And I think that will be a very dominant theme when we look back on 2021. If we have this call at the beginning of next year, I think the path of inflation, the path of rates, will be one of the dominant themes that influenced returns in financial markets. So, clearly a very significant issue, for us to focus on. A lot of different things are going to influence it. The commitment that monetary authorities have made is very clear, and by that I mean lower for longer. And they certainly, can do that in the short end, keep short interest rates very, very low or at zero effectively. Longer term interest rates are tougher for central bankers to control, and they are influenced by a broader range of factors. So we do have tremendous stimulus expected in many markets. We do have, I think, elements of pent up demand because of the experience that we've all had over the past year. That's a difficult one to understand, how it impacts economies, how it ultimately flows through inflation. And as we get through the pandemic, we now have to kind of think back to the experience that we had in 2019. We have to remember that there was a significant trade war. We have to remember that there were embedded trends like deglobalization that ultimately can continue. And while there are certainly some positive aspects to that diversification of global manufacturing, it is also a bit of uncertainty around how it flows through and may in fact impact inflation expectations out over time. So it's a key element, I think, for all investors to think about, not just because of what it means for certainly for where interest rates go, but it also with yields this low, certainly as we're seeing a bit of the unwind of what happened in 2020, where longer duration fixed income assets really benefited from that decline in rates. They're certainly now a bit more impacted or have more of a headwind going forward, and that certainly is influencing those very high level asset allocation decisions that we're making.
Thank you, Ed. Seems that the inflation is still not a big problem in the near term, and the policy is accommodative, still can continue at least for the first half of this year. Right? So
yes, that's correct. Yeah.
Right. And another issue that we went through in the past 3 years is about the U.S.-China tensions and the trade war, and increasing the tax between two countries. And yesterday, after Joe Biden assumed his role as a presidency, he signed almost 20 executive orders, but still there is still no any orders about the unwinding the tax hike between two countries. Maybe can you share your view about the U.S.-China geopolitical matter in the Joe Biden era?
Yeah, and I think this is something that we will learn more about.
Right.
I think President Biden, as his administration really starts to get to work, but as you mentioned, it's an important. Is it missing? And I think the initial efforts or actions of President Biden and the administration have been very domestically focused.
Right.
Things that are very important to certainly his party, his political party, and I think that was expected. I think as it relates to U.S.-China, we will learn a lot more in the coming days around the path forward. But that said, I think we're quite optimistic. In fact, that's not to say that we think the tensions will immediately dissolve. That's not the expectation that we have, but that there'll be more predictability to it. There'll be more of a disciplined approach to discussions, to negotiations than existed under the prior administration's approach, which was a bit difficult to to evaluate at times and created uncertainty. And we know that, markets of the things that markets dislike the most, uncertainty ranks very highly. So I think we're quite optimistic that the new administration will take a different tact, in that markets will take a bit more comfort in the way that the debate, the way that U.S.-China relationship is evolving. And like I said, I once again, it's important to state that while that's not an expectation of all tensions dissolving, it is an expectation that the world will take a bit more comfort in the way that the policy between the two nations is evolving. And that's something that we're looking forward to, and we think markets will be very receptive to.
Yes, seems the things will be more predictable than before. Right.
Yes.
And we are come into the conclusive slides here. Maybe you can end up here by sharing your thought about your Franklin Templeton top overweight and underweight call for 2021 asset allocation strategy.
Yeah, I'm happy to, and I really think many of the areas of our conversation did touch on many of these themes. So I think to some extent, really looking across the top, starting with China, with emerging markets being an area that we are very constructive on, a lot of that having to do with the more successful approach in dealing with the challenge that the COVID-19 pandemic has created. And that's certainly something that is leading to a quicker return to economic growth in China, quicker economic growth outlook for many of the regions in East Asia in particular. But once again, wanting to be selective, wanting a selectivity as we think about where to deploy assets in emerging markets because of that differing outcome that we're clearly seeing across the globe. In the U.S., after seeing that tremendous performance in equity markets through the summer, touching on those technology stocks that we did in that conversation, while they've performed so well, we may not necessarily expect them to continue to outperform, but we also don't want to abandon them because we do think there are really important themes around innovation, and this experience has taught many of us different ways to think about doing our daily lives. Many companies different ways of how to engage their clients, and those are lessons, those are experiences that we don't expect to automatically dissipate. So we want to remain kind of broadly exposed, but the reality is markets diverged substantially, and now there's a real opportunity for greater breadth in the markets. There's an opportunity for returns coming from a broader range of companies, and we want to make sure that our clients' investment portfolios have those kind of diversified exposures. Ultimately, being overweight equities is something we're going to continue to recommend for clients, and that's because of this unique period in time, the commitment that policymakers, both monetary and fiscal, have made, and we expect to continue, and that to benefit equities and create this backdrop relative to bonds that is relatively constructive. We touched on the risks down the line, while maybe not in the near term. Inflation is certainly something that we're going to put very high on our list of things to be concerned about, and that could be very damaging to fixed income returns, as we know. So I think there's a lot to kind of unpack in thinking about a multi-asset allocation portfolio, but those are the key themes and key areas that we're set up today in our client portfolios, and that we expect to be very significant issues for investors in 2021.
Thanks for being with us today, Ed. And lastly, so since this is the first time that we having Franklin Templeton sharing the investment thoughts and knowledge to Thai investors ecosystem, anything you would like to say to Thai investors? Lastly.
No, just would really thank you for the opportunity, and certainly something that we're very proud to be a part of, and happy to bring our views that are cultivated from this global investment team that we have, and certainly wish everyone well.
จบลงไปแล้วนะครับกับมุมมองนะครับ post pandemic playbook นะครับจาก Franklin Templeton โดยคุณเอ็ดเวิร์ดเพิร์กนะครับโดยที่เราได้รับมุมมองที่น่าสนใจไปในหลายๆเรื่องเลยนะครับไม่ว่าจะเป็นเรื่องของกลุ่มเทคโนโลยีหรือกลุ่มแฟงไมน์นะครับซึ่งมุมมองจาก Franklin Templeton บอกว่าในปีนี้อาจจะไม่ได้ร้อนแรงมากเท่าทุกปีไม่ได้จะปรับตัวลดลงแต่อาจจะไม่ได้ขึ้นแรงมากเท่ากลุ่มวัฏจักรเช่นกลุ่มการเงินหรือพลังงานซึ่งมีแนวโน้มจะเติบโตได้ดีนะครับในภาวะที่เศรษฐกิจสหรัฐและเศรษฐกิจโลกฟื้นตัวอย่างชัดเจนนะครับนอกจากนี้ก็ยังได้ภาพรวมของการลงทุนนะครับว่าหลังจากนี้ไปเนี่ยธีมการลงทุนที่น่าสนใจไม่ว่าจะเป็นเรื่องของการลงทุนในตลาดเกิดใหม่ปัญหาเรื่องของจีนกับสหรัฐที่น่าจะมีแนวโน้มคลี่คลายมากขึ้นคาดการได้มากขึ้นนะครับรวมไปถึงสรุปมุมมองของ Franklin Templeton ว่าควรจะ overweightในส่วนไหนซึ่งแน่นอนก็คือในส่วนของหุ้นนะครับทาง Franklin Templeton ก็มีมุมมองว่า overweight 3 อย่างนะครับก็คือหุ้นสหรัฐหุ้นจีนแล้วก็หุ้นญี่ปุ่นชัดเจนเลยนะครับก็จากนี้ไปนะครับเราก็ทาง FINNOMENA เนี่ยก็จะมีมุมมองการลงทุนความรู้จาก Franklin Templeton Academy นะครับข้อมูลทั้งหมดที่อยู่บน resource ของ Franklin Templeton ที่มีนักวิเคราะห์แล้วก็ Fund Manager เป็นพันๆคนเนี่ยเราจะนำมาย่อยให้ง่ายนะครับแล้วก็นำมาเผยแพร่ให้กับนักลงทุนไทยได้ประกอบการตัดสินใจลงทุนเชื่อว่าปีนี้นักลงทุนที่ลงทุนผ่าน FINNOMENA จะมีผลการดำเนินงานที่ดีขึ้นอย่างแน่นอนครับ